Hello traders, have a good day. In this video I'm going to explain how to place a stock option trade. So this is what we are going to do. Let's just go straight to business, and let's say that we want to trade. Let me show you something I prepared for this. Okay, here it is. Please take time to read absolutely everything and make sure you do understand everything before you go ahead. Remember, do not share information provided on this very document. However, we are going to trade options for Tandem, TNDM. The current price is 48.01, and this is today. Type of credit is going to be a call credit. The order is going to be sell to open, one leg, and then buy to open, the second leg. So the strikes are 63 and 64. The premium is 0.15. Okay, and this is going to be a limit order. GTC is going to expire on April the 3rd, 2020. Remember, always check the date format. Okay, the date format. This is important. I'm using European format. The margin required, the collateral, this is what we call collateral also. So perhaps I'm going to change that word in the form. So the collateral is $100 US. I don't have any specific note for this transaction. So this is what we are going to do. Okay, this is going to be our next contract. Next trade. So I'm going to put this order aside. I'm just going to make it smaller. For just for my convenience. Okay, I'm going to put this in the other monitor. I'm going to put this here. Okay, so this is my Thinkorswim monitor. So we are going to straight to what? Remember, we start with Tandem. The price should be about 48.01. Let me change a little bit. It depends when I send you this and when you get it done. TNDM, Tandem Diabetes. 48.01. Okay, price is okay. So this is what we are going to do. The strikes are going to be somewhere 63 and 64. Somewhere here, this is close to 63, and 64 is going to be somewhere here. Okay, so this is what we are going to do. I'm going to show you in this other software. I'm going to put it here. Okay, 63 is about here. I'm going to change the color. I'm going to change the color to make it more visible. Okay, 63, and then 64. And then the expiration, I'm going to put it here, is going to be, according to the form, expiration is the 3rd of April, April 3. So here we go. Let me put another one here. I need more space. 3. Here it is. I'm going to change also the color here. I'm going to put this red. So this is the end of the contract, okay? In this case, I do want the stock price to go low, and then I will get my profit, the profit of the contract, as far as this remains below the lower line. Okay, the lower line is this one. Now, if this was the opposite, if this was instead of call, if this was a put, then I would give you something different. Let's say I could give you, I don't know, I have to do the study, but just for the example, in order to make this video usable for both sides. So let's say this is 40 and this is 39. Let's say 49, 39, 40. So this is going to be a put. Then at expiration time, I would expect the stock price to be above the upper line, above 40. Okay, so this can go down a little bit, can go up, whatever it wants, and or can go sideways as far as at this day on April the 3rd is at least 1 penny above 40 cents, $40, then I'm going to get my profit. Okay, so exactly the same is for calls and puts, but this is going to be a call. It's the same operation, but opposite side, and that is why it is important to read the report. The report says what? It says credit call. Do not do mistakes here. So this is what I'm going to do. I'm going to place the two strikes, 63 and 64, and this is going to end on April the 3rd. Let's go. The platform is this one. Okay, so I'm going to trade. I'm going to trade tandem. And tandem is, I want it to be somewhere. Tandem, it is here. So most likely you are going to receive this empty like this. So you have to open the right one. In fact, this is not too necessary. In fact, you can go ahead and use this straight. Our strikes are going to be 33 and 34. By the way, before you start, you have to make sure that single is the standard, but we are going to trade vertical spreads. So make sure you have this vertical. Okay, again, in this location, instead of spread single, click on spread vertical. Make sure you have vertical. Once you have vertical, the two strikes, this is why we have two strikes here, is going to be 33 and 34, somewhere around here. Okay, you click there. By the way, you click anywhere here. You may click anywhere you want. The best thing is to click in the right place in order to show that you know what are you doing. But so this is going to be sell and buy according to the form here. We are going first sell to open, then buy to open. Do not commit mistakes with this. Sell, buy, 63, 64. Let's go for sell and buy. I'm going to change this to sell. Automatically it's changed to buy. How many options are you going to buy? Well, that depends on your budget. That depends on the homework we did in the training. So you have to be sure that you know what are you doing. How many are you going to buy? I don't know. Maybe 6, maybe 4, up to you, according to your budget, the amount of money you have. This is going to be tandem, and this is going to be April the 3rd. The strikes are going to be 63 and 64. This is going to be a call. This is going to be a 15 cents limit. Good till cancel. I'm going to bring this here in order to show you that we are in the. Okay, this is a little bit bigger. I'm sorry, this is not bigger than that, but I guess you can read this perfectly well. Sorry. This is a vertical spread. Sell and then buy according to this. I first sell and then I buy. How many contracts? Up to you. Remember, you have to do your own calculations. You have to be sure that you have the money for this. And in this case, each one will cost me $100. Sorry, this is the collateral. They will retain this money. It's not that it's going to cost, but this is the money that they return. The date, expire date, according to European format, is April the 3rd. Here we have April 3rd. The two strikes, for selling 63, for buying 64. So we have 63 for selling here, selling, and then for buying 64. This is a call. Is this okay? Yes, it says a call in the form. The price, this price is the premium. Okay, this is the price I'm going to get when the contract expires. 15 per stock, and each contract is 100 units of stocks. So how much money I'm going to get? 15 times 100 is $15. Limit GTC, best possible exchange. So confirm and send. Now pay attention to this. This is extremely important, more important than in stocks. First of all, sell. I said here I'm going to sell 4 contracts. Vertical spread, tandem, 100 units, 100 stocks. This is a weekly contract, and we bought for 3 weeks until April the 3rd, 2020. The strikes are 63, 64, call. This is the premium GTC. Okay, this is to open, by the way. How much? This is important. The maximum profit is $60. Now I have 4 contracts of $15 each. Okay, then it's $60. However, if I lose money, now this is extremely important. If I lose money, I'm going to lose 340, and that will be the maximum. I don't need to lose all that money. I can do something to avoid this. We are going to talk about this. But if I lose the money, I'm going to lose up to 340. That's plenty money, so we have to be careful with this. This is a credit 520. Why 520? This is the commission. 65 cents per contract. Okay, so 65 times 8, because it's 2 legs. One leg are 4 contracts to sell, sorry, and then the other leg is the 4 contracts to buy. So to sell and to buy, 4 and 4, 8. So 65 cents times 8. This is what is going to cost me altogether. Instead of $60, I'm going to get $54.80. This is important. $54.80 is what I'm going to get. Okay. Power effect. This is going to be $60 that they will keep with them. Okay, $60 plus, since that is 100 minus 15. Okay, 100 is the collateral, so they are going to take $100 per unit plus the $60 that will cost. So in fact, it's not plus, it's 85 plus 15. Okay, so 85 plus 15 is $100. For contract is 400. Here says 340, and that is just the buying power effect. But here you have the indication that they will withdraw from your account until contract expires $100 per contract. So in this case, they will take $400. Okay, just take the number and make it round, and you will see how much it is. It's $400. And then once everything is okay, I send it. Okay, I go to monitor, and then I have here, this is not market hours, this is closed. So here I have the information. 63 is the first strike, 64 is the second. This is the date. 100 units of stocks for each. This is the price for buying, and this is the price for selling, and so on. Okay, if I go to this place, I will see some extra information, okay? And you know how to reach this location. 4 contracts, tandem, April the 3rd, 63, 64 is a call, 15 limit is the premium, okay? And that's it. I just have to wait until the market opens and then I go ahead. However, let's say that as soon I'm going to click right button in this place and then left here, replace, cancel or replace order. Let's say that once the market is open, I see here the mid is 10 or is 20. Even if that is 20, the system is not going to buy. Must be the number that I choose. The amount of money I choose must be the right one. So here I'm going to change accordingly, okay? I'm going to, if that is 16, I'm going to put 16, and then I'm going to confirm and send it again. It tells me that the previous one was canceled, and then I go to monitor, and then I wait another half an hour or so. And then if the system didn't buy the option, then I go back here, right button, left button here, and then I change accordingly. Maybe that went down again, or I don't know. I can even if this is 15, I can try with 14, 13, about 2 cents below and 2 cents above, or the same. And then you play all the time until you get it done. You must have this as soon as possible. If you wait the next day, it's perfect. No problem. This is not like stocks. This is okay. However, the price is not going to be the same, and this is not going to change in your favor. It's going to change against you. It's going to be lower, so you will get less money. Therefore, the best thing to do is to try to buy the very same day I send you this report. So in this case, I'm going to leave this in 15, and then okay, because it says 15 in the middle. Everything didn't change. Everything is the same. So perfect. Okay. Once I buy this option, I'm going to see exactly as these two. These two are options too, okay? These are options. This one is going to expire on March the 20th, and the strike price was $30.31, and this was a call. I have only one contract. Remember, this is my demo account, so only one contract for each, and I can see that until now it got 42% of the full premium. I got already 90, and here in this one I got 72.22 for the full premium. Now today is 17th before market hours, so we have 17th, 18th, 19th, and 20th. And then on the 20th, the contracts are going to expire, and I'm going to receive 100% of my premium if everything was okay. How do I check this? I just have to check. The BP was 30 and 31. Let me take you to this place where it is. Here. BP. Okay, and the strikes were 30 and also 31. Okay, these were the strikes, and then the expiration time, the expiration day was 20th here. So just imagine, can you say that this, we have 1 day, 2 days, 3 days, and then 4 days. Within 4 days, we'll raise from $18.84 to $30. It's impossible. It's almost twice it's about 90% up. 90% up will not do within 4 days unless a miracle happens, and then I will lose the money. But unless that situation happens, it can go down, can go sideways, or can go up wherever they want to, wherever the stock wants to, as far as this doesn't reach the level of $30. As far as it is at least 1 penny below $30 at the expiration time, which is Friday 20th at the end of market close, market operation hours, when market closes. So this is the way I check, and then you can check that every week or every 2 days, so whenever you feel comfortable, or if you want to check, maybe you don't really want to check. So this is how I check my contracts, my options, okay? However, let's say that this is going against me, then I'm going to see here minus, okay? I'm going to see the amount of money I'm losing, and then I want to close the operation. Then I'm going to click right button, create a closing order. Then since this was a sell, remember, where is this? Credit type, okay, sell. I sold and then I bought. So this was a sell transaction, okay? All the options I do are sells, well, most of them, almost all of them. And unless that is a different one, you are going to assume that this is a sell. So just to sell, I have to buy in order to close, because this is a short, remember. I am selling a call is short. If I sell a put, it's a long one, from bottom to top. So I'm going to buy this to close the contract, and then I do nothing. I'm going to receive only 2 cents, which is $2 credit, just $2 credit, because I didn't wait until expiration day. And then this is going to be a GTC. Okay, nothing else is going to change. I touch on nothing, absolutely nothing. Confirm, and then I know what is going to happen. They are going to take again 65 cents per leg, 2 legs 130, and then they will sell for me this option. Of course, I'm going to cancel the order because I don't want to sell. I want to get the 100% of money. Okay, so if I sell, I'm going to pay again for the transaction, 65 cents per leg. If I buy 5 contracts, take this in consideration, sorry. Consider this. If I buy 5 contracts, I have to pay 65 cents per contract, 5 for the sell and 5 for the buy, which is 10 times $6.5 US I will pay commissions, okay? So I think that you better don't sell that, just keep until expiration, and you get what you get, okay? Okay, guys. Oh, by the way, the margin required here says this is the collateral, okay? This is $100 because this is only one contract, okay? And this one is 2 contracts, which means $200 margin. So altogether in these transactions, because here I have 4, and these transactions I'm going to, the system is going to keep from trading 640 US dollar, okay? This 340 is going to be transformed in $400 as soon as the transaction is done. So it's going to be here, instead of 640, $700, 400 plus 100 plus 200. Okay, this is important to consider. Okay, guys, this is it for now. I hope this video is helping you to do your own trades. Have a great and happy trading day.